ABC World News, your daily briefing on business and economics from the world's financial centres. From New Broadcasting House in London, World Business Report.
Snap, crackle and pop. Yep, the bubble looks to have well and truly burst. For Snapchat's parent company, its shares plunge on bigger than expected losses. And from one troubled tech firm to another, Uber's ousted boss, that bloke right there, Travis Kalanick, has been sued for fraud by one of the app's biggest investors. Hey, hello everybody, I'm Aaron Hazelhurst. Welcome to the program. We've got about eight and a half minutes. You give me that and I'll give you a fascinating snapshot of all the latest in the world of business and money. Let's start. Snapchat. It's the disappearing messaging service that just keeps making money vanish. Its parent company, Snap, has seen its share price, wait for this, it's sunk by close to 17% in after-hours trading after it reported widening losses. Now, Snapchat, you may remember, it launched in 2012 on the markets as a mobile app that allows users to send photos that vanish within seconds. And it's been a big hit with millennials, but has never, ever made a profit. Take a look at some of the details. Perhaps the most keenly watched number by investors is the number of daily active users. That rose to 173 million. It's up only 4% compared with the first 3 months of 2017. Compare that with Instagram Stories, a service on the Instagram platform that closely resembles Snapchat. It has 250 million users. Revenue, so all the money it rakes in at Snap, almost doubled to for that 3-month period, that quarter, to just almost $182 million, which seems positive, but it's also lower than what the experts had been forecasting. And the losses, they are piling up. The tech firm lost close to $500 million in that 3-month period, and investors will be very aware that that's just not sustainable. There you go. Let's get more, because Colin Jacobs is the managing director of Immediate Future and joins us. Colin, great to have you with us. It used to be that the cool kid, or was always seen, right, as the cool kid on the block, but converting cool to cash has been their problem.
Absolutely, it has. User growth has been limited to millennials and centennials. They've not done enough to expand their user acquisition beyond those audiences. But following on the IPO, we expected to see more ad products available sooner. Bizarre decision in hindsight. Monetization comes off the back of ad companies spending their budget marketing to the users. Whilst there were use cases coming out in America earlier in the year of lovely products that were available, they've just not been brought to market in an inclusive and fast enough fashion. For example, the much anticipated self-service ad platform, we only got access to 2 weeks ago.
Wow. So too little, too slow.
Too little, too slow. And if you think the Christmas ad spend season is upon us, they will kick in September. We don't think they've done enough to truly enter that competitive period. Conversely, Facebook and their subsidiaries, particularly Instagram, they saw an opportunity. The Instagram advertising solution is essentially Facebook's ad platform. Yeah. Proven, successful, brands know they're getting results. So while companies couldn't spend with Snapchat, they've been piling in to Facebook. And
isn't that and correct me if I'm wrong here, it appears that this is this tech arena that we're seeing at the moment, that any newcomer-ish, you know, if you will, Snapchat, Blue Apron, I think it is, the food one that Amazon's beating up. But they come onto the market, and then the big guys, the Amazons, the Facebooks, the Googles, they draw the wagons around, and you got no hope in hell as a newcomer to compete with these big guys.
Absolutely. Barriers to market. Evan Spiegel will be combative in his rhetoric about innovation and pioneering new technology. But if there isn't a barrier to market to prevent a rival adopting a technology, as we've seen with Instagram, Zuckerberg will get his team to take it on.
Got to wrap it up. A takeover target, possibly?
I think so.
Wow, there you go. Short and sweet. CJ, thanks very much. Always a pleasure. Colin Jacobs joining us there. Okay, right there.